We are still tantalizingly close to a Bitcoin all-time high. We're challenging key levels of resistance to the upside, and there is still really, really strong institutional demand. But even so, there is a massive wave of capital still waiting to hit the market. A little bit later on, we're going to describe where this money is coming from and how we know it's not here yet. But first, we've got more bullish news to go over, and we're going to jump into the charts and take a look at some price action. Guys, as always, nothing I say should be considered financial advice. This is just me musing about the markets for entertainment purposes. With that, let's jump into the charts and have a look at some prices. So daily chart on BTC USD. We've had a bullish retest of this trend line, this descending trend line across the daily highs that's been respected once, twice, 3 times, 4 times, and 5 times. Now it's been flipped and tested again. And we've just come up to challenge 72K again for the 3rd time in the last 3 days. If I zoom into the hourly chart, you can see that this bounce is confluent with essentially the last point of resistance turned support between 70,300 and about 70,600. Again, this 72K level, which we've just tapped now as I'm recording this, is so key to the upside. So as we can see, if we take a look at Bookmap, there is a massive ask waiting up at 72K. Essentially, that means limit orders are stacked up at 72K to sell Bitcoin once we reach that level. That is your resistance manifested in the order book, right? Those are actual orders stacked up there to sell at 72K. Willy Woo also watching that level, tapping 72K is the fuse that's set to start a liquidation cascade, $1.5 billion of short positions ready to be liquidated all the way up to 75K. If we jump back into our CoinGlass liquidation map, short liquidations at that 72K level have now jumped up to around about $1 billion versus the last time we spoke about this. And up at that 72.7 level, which is the last key point of resistance before the all-time high, the aggregate liquidations would be something in the region of $2.3 to $2.4 billion. Now, of course, there are leverage positions on both sides of the market, arguably more to the downside, but that sort of makes sense given that there's just a lot more price action to the downside for people to position themselves against. What I want to point out with this chart is essentially the fact that we're much closer to those short positions being liquidated if we move to the upside than we are to a liquidation event to the downside. You can sort of see that in the shape of this chart, right? So look how the gradient of this line descending down depicting long positions that will be liquidated. And conversely, look at this line to the right depicting the short positions that will be liquidated. It's a much steeper gradient. That means essentially we are closer to that big liquidation event on the upside than we are to it on the downside. Now, just to explain that another way, if we assume price right now of $70,900, if we were to drop down in price by 2K from here, that would take us to $68,900, and that would represent about $1.83 billion worth of long positions liquidated. If we were to move up in price by $2,000 to $72,900, that would represent around $2.5 billion worth of short positions being liquidated, i.e. that big liquidation event is closer upwards than it is downwards. Another way of looking at leverage in the markets is to take a look at funding rates. Essentially, the funding rate exists in the perpetual futures contracts in order to keep the price of the perpetual futures contract, which is a derivatives product, in line as much as possible with the underlying spot Bitcoin price. Now, the thing to pay attention to with this chart here is the aggregate funding rate right now that we're up at these all-time high levels is much lower than it was back when we were at these all-time high levels in March. That essentially indicates that we got to these prices this time around with much less leverage than we did last time. And that points towards healthy market structure, i.e. whales buying spot. Now, the caveat to that, of course, there is leverage on both sides of the market, and that makes it very easy for whales to manipulate price. If price was to move just a little bit in either direction, things could get really volatile very quickly in both directions. Now, on the subject of whales, yesterday was another massive day for ETF inflows. Net inflows at $488.1 million. So that's a cumulative $1 billion plus over the last couple of days alone. And yesterday marked the 17th consecutive day of spot Bitcoin ETF inflows. On top of that, the Bank of Canada released an interest rate cut yesterday, and the European Central Bank cut interest rates for the first time in 5 years, down from 4% to 3.75%. Now, the Fed is expected to hold interest rates at its next release in June, but we've got more data out before that, including CPI, and they are expected to lower rates later on in the year. As we know from past cycles, lower interest rates generally mean risk on for assets like stocks and Bitcoin. So it's pretty apparent that institutional whales are still more than happy to pick up Bitcoin even at these elevated prices close to all-time highs. But where is retail? Let's go into some evidence that suggests pretty strongly that retail isn't even here yet. Look at this. So this chart posted by Miles is showing you new YouTube views for crypto channels versus the price of Bitcoin. Now, essentially, the thing to pay attention to here is how much higher those new YouTube views were last time we were up at all-time highs versus right now. So you're looking at 4 million new views a day back in 2021, all-time highs, versus today, less than 1 million. When we were at all-time highs back in March, that number was less than 2 million. So essentially, the number of people looking at crypto videos has gone down by 75%, even though we're back at these all-time highs. Who's looking at crypto videos on YouTube? Well, it's not BlackRock, right? It's retail investors, people like you and I. So why is this so important? Well, essentially, the argument goes like this. This cycle, we've reached these all-time high levels without the sort of mass retail interest that we've seen in previous cycles. So we already know that there is a massive amount of retail capital out there waiting, and the evidence suggests that it's not even here yet. So the cascade of events could go something like this. We might see those liquidations up at 72.7, then we might see a new BTC all-time high. That sort of thing will be represented in mainstream media, and then suddenly retail investors start downloading their Coinbase app again, they start looking for their Binance password, and as we know, retail has absolutely no problem buying the top, so all of that money will come flooding in, and things will likely get absolutely parabolic when that happens. So we don't have a great way of predicting when this retail money might hit the market other than making assumptions about things like mainstream media uptake of new all-time highs or something like that. But companies who cater to retail traders are gearing up for an event like this, okay? So number one, look at this. Binance resumes MasterCard payments for crypto. I remember when that feature was lost actually back in August 2023. Who's buying crypto with MasterCard? Well, it's not people like BlackRock. It's people like you and me, right? Retail investors. As well as that, Robinhood is working to acquire Bitstamp in a potential $200 million deal. Bitstamp is one of the longest standing crypto exchanges. They were actually the first crypto exchange, I believe, in the UK to get FCA regulation. Robinhood, of course, needs no introduction. I believe they have 11 million monthly active users. They're one of the biggest stock trading platforms, again, catering to retail particularly. So on top of that, we got the news yesterday that Bybit apparently opened registrations again for Chinese users. Now, it's not entirely clear, depending on which source you look at, whether or not that includes mainland Chinese users or whether it's just expats. But really, really big news because, of course, crypto trading and mining has been banned in China since 2021. And the Chinese market is absolutely huge, something like 17% of global GDP. So a story like this brings into question, again, that ban. And if that ban was to be lifted, that would open up a huge, huge amount of capital, particularly retail capital, which, again, would be open then to come flooding into the crypto markets. So it seems pretty clear that we don't have the same kind of retail interest that we had last cycle. Whether that comes sooner or whether that comes later is really hard to tell. But one thing that's for sure is that once that retail wave does hit the market, things are going to get absolutely astronomical if we see anywhere near the kind of retail mania that we saw last cycle. So how do we take advantage of that without just becoming another retail sheep? Well, what do we know about retail sheep? We know that they're more than happy to buy the top and sell the bottom. Essentially, they get into positions at the top of the market and then sell those positions later on to the big whales, either because they had poor conviction in that trade, they get scared, or because they bought using money that they didn't actually have, i.e. they got into leveraged positions and then were forced to sell by becoming liquidated. That is why it pays to be really, really patient and mindful at times like this in the market where we know there's leverage on both sides and we know prices are going to be incredibly volatile. Now, further to my point, look what happened even just in the last hour on Bitcoin. We had this nearly $1,500 candle all the way down from 72K to around 70,560. If price moved just a little bit further in either direction, we'd start hitting into those liquidations and things would be magnified even further. So we know that there is a lot of leverage in this market. We know that there is a lot of manipulation in this market. And that is why I'm personally sitting this one out until we have either more information or lower prices so that I can accumulate more Bitcoin at a favorable price and not be just another retail sheep buying the top and losing money. But that's not financial advice, that's just my opinion. Guys, as always, thank you so much for listening. Plenty more to come. Catch you in the next one. Cheers. Bye-bye.